Hello and welcome to Arab Business. A new state-owned ethylene factory due to start production in Alexandria next year could save Egypt about $500 million on annual imports and allow it to begin exporting petrochemicals to Western Europe and Africa. Chairman Abdulrahman Zaid said the factory, operated by Egyptian Ethylene and Derivatives Company, a joint venture formed by three state-run petrochemical companies, should produce enough to cover up to 45% of local demand for ethylene and other petrochemicals needed to manufacture plastics, rubber and glass. He added that the project was more than 70% complete and would begin production in the last quarter of 2015. The International Monetary Fund says Jordan's economy is resilient despite regional tensions in Syria and Iraq and violence in Gaza, with growth of over 3% projected this year. The IMF said growth was expected to reach 3.3% this year, up from 2.8% last year, helped by recovery in several sectors including mining and agriculture. Inflation was expected to decline to less than 3% by the end of 2014. Jordanian officials say they have also been hard hit by the cost of accommodating 600,000 registered Syrian refugees fleeing the civil war, who've added to the strain on an aid-dependent economy already burdened with over 20 billion dinars in public debt. Kuwait's budget surplus has edged up to 12.9 billion dinars in the fiscal year to last March as government spending fell, largely because of a drop in capital expenditure. Finance Ministry data showed Kuwait is still struggling to spend its oil wealth on economic development because of bureaucratic red tape and political conflict, which has slowed big infrastructure projects. The budget surplus, equivalent to around 26% of GDP, was up marginally from 12.7 billion dinars in the previous fiscal year. Kuwait has posted budget surpluses since 1995, but its rising public sector wage bill and large subsidies are expected to slash the surplus to around 12.1% of GDP in 2019. The UAE's Ministry of Health has announced a price reduction for around 422 innovative and produced drugs, as part of its initiative to stem the surging cost of medicines in the country. The announcement, the fifth such reduction in the UAE, followed a meeting between ministry officials and international pharmaceutical companies and will be carried out in cooperation with large pharma firms. A study across the region found that drug prices in the country were 23 times higher than World Health Organization recommended levels. The UAE's biggest reduction in drug prices took place in June 2013 when health authorities cut prices of 6,632 medicines, including drugs used for the treatment of hypertension and heart failure, antidepressants, asthma and antivirals for HIV by 40%. And Saudi Arabia's National Industrialization Co. Tasni plans to pay $480 million to raise its majority stake in its Crystal subsidiary by a further 13%. Tasni has submitted an offer to the Gulf Investment Corporation to buy the additional stake in the firm, which makes titanium dioxide, thus raising its overall holding to 79%. The deal, expected to be completed in the fourth quarter, will be paid for in instalments and will be financed through Tasni's own cash reserves and a Sharia-compliant Murabaha facility. For more updates, please visit Levant.tv. That was it for today. We'll be back tomorrow with more from the business world in the Middle East. Goodbye.